How to invest your first $100 in the stock market, a beginner's guide. Investing in the stock market is one of the most effective ways to build wealth over time. If you're just starting out and wondering how to invest your first $100, you're in the right place. This guide will walk you through the basics of investing, choosing the right tools, creating a strategy, and staying on the path to financial growth, all with just $100. Why start with $100? Many people think they need thousands of dollars to start investing, but that's not true. Thanks to modern technology and the rise of user-friendly investing platforms, you can begin with as little as $1. Starting with $100 allows you to learn the ropes, make mistakes with low risk, and build a habit of investing early. Step 1. Understand the stock market. Before you put your money into the stock market, it's essential to understand what it is and how it works. What is a stock? A stock is a share in the ownership of a company. When you buy a stock, you become a partial owner of that business. Stocks are bought and sold on stock exchanges such as the New York Stock Exchange, NYSE, or NASDAQ. How does the stock market work? The stock market connects buyers and sellers of stocks. Investors buy stocks hoping that the company will grow and become more valuable, increasing the stock's price. If that happens, you can sell the stock for more than you paid and earn a profit. Step 2. Set your investment goals. Before investing, ask yourself, what am I investing for? Retirement, savings, financial freedom, etc. How long can I leave this money invested? Am I okay with market ups and downs? If your goal is long-term growth, the stock market is a good place to start. But if you might need the money soon, it's better to keep it in a savings account. Step 3. Choose a brokerage account. To invest in stocks, you need to open a brokerage account. This is like a bank account, but used for buying and selling stocks. What to look for in a broker? No account minimums, zero commission trades, fractional share investing, user-friendly mobile app, educational resources. Recommended brokers. 1. Robinhood, easy to use, zero commissions. 2. Fidelity, great reputation, fractional shares, beginner-friendly. 3. Webull, modern interface, zero fees. 4. Charles Schwab, long history, excellent support. 5. SoFi Invest, good for new investors, includes financial education. Tip: open a taxable brokerage account, not a retirement account like an IRA, for easy access to your money. Hacksnaf Step 4. Understand your investment options. With your $100, you can choose between 1. Individual stocks. You buy shares of a specific company, e.g. Apple, Amazon, Tesla. These can give high returns, but are riskier. 2. ETFs, exchange-traded funds. An ETF is a bundle of many stocks. Buying an ETF gives you exposure to several companies at once. They're great for beginners due to lower risk. Popular ETFs, VO or SPY, tracks the S&P 500, top 500 U.S. companies. VTI covers the entire U.S. stock market. QQQ focuses on tech companies. 3. Fractional shares. You don't need to buy a full share. If Amazon stock costs $3,000, you can invest $10 and own 1/300th of a share. This allows you to diversify even with $100. Step 5. Build your $100 portfolio. Here's how you could split your first $100. Option A, conservative, safer, and diversified. $70 in an S&P 500 ETF like VOO or SPY, $20 in a dividend stock like Coca-Cola or Johnson & Johnson, $10 in a savings account or cash reserve. Option B, balanced, growth plus stability. $50 in an S&P 500 ETF, $30 in a growth stock like Apple or Microsoft, $20 in a dividend-paying stock. Option C, aggressive, higher reward. $40 in a tech stock like Tesla or Nvidia, $30 in an emerging market ETF, $30 in a high-risk, high-reward stock like a startup or small cap. Step 6. Place your first trade. Once your account is set up and funded, 1. Search for the stock or ETF you want. 2. Choose the amount in dollars, not shares, if using fractional investing. 3. Select buy and use a market order, buys at the current price, or limit order, you set the price. 4. Confirm your trade. Congratulations, you're now an investor. 7. Learn and monitor. Investing doesn't end once you buy a stock. Keep learning and improving. What to learn? How to read stock charts. What affects stock prices, company earnings, news, economic changes, long-term versus short-term investing strategies. Diversification. Step 8. Stay consistent. Don't just invest once. Build the habit of regular investing. Even $10 a month makes a difference over time. This is called dollar cost averaging, investing a fixed amount regularly, regardless of market conditions. Step 9. Avoid these beginner mistakes. Chasing hype stocks, like meme stocks or viral tips. Panic selling during dips, overchecking your portfolio, not diversifying your investment. The market will go up and down. Successful investors stay patient and think long term. Step 10. Plan for growth. Your first $100 is just the beginning. Over time, as you earn more, try to increase your monthly investments. The earlier and more consistently you invest, the more you benefit from compound growth when your investments earn profits, and those profits earn more profits. Conclusion. Investing your first $100 in the stock market is a smart and achievable goal. It teaches you valuable financial skills and gets you started on the path to building wealth. Use this opportunity to learn, practice, and develop good habits. Whether you grow your $100 into $1,000 or $100,000, the key is to start, stay consistent, and think long term. Remember, you don't need to be rich to invest. You become rich by investing wisely and consistently.